Hello, I'm Sunanda Jha and welcoming you to our weekly webinar. Before moving towards the topic of the week, we would like to wish you a happy and a prosperous Diwali. For today's topic, we have ETFs, the exchange traded funds, a platform which diversify your investment through stockbrokers. And to talk more about this topic, we have Vijay Raj along with different investment manager who would share their insight on the same. So let's get started.
The other way to play the Indian market is through the next two opportunities will be this ETF and a bank we'll talk about. Both of these opportunities we've got in our own portfolio. So we use this ETF, which focuses on replicating Nifty 50 index on the NSE, and that's a pure beta play on the Indian market. And I've obviously talked about the active fund Fidelity that's underperformed on a shorter term basis, does produce alpha on the longer term basis. But if you look at the returns of this ETF, it's generating 1 year returns of 56%, which is pretty much in line with what the market has been doing there. 3 year, 5 year returns are very good. So it's a decent play to play the market on a beta level. You will get the volatility along the way. The market has obviously run pretty hard in India, as Vijay was showing the returns. So if they come off, this will come off on a shorter term basis, but longer term, it's still a growth market. India is, and it's one way to play it. The MER is a bit above normal ETFs, about 69 basis points, but again, it'll give you exposure to growth segments of the Indian market, i.e. financials, and the conglomerates and IT stocks. That's where, and the consumer stocks. That's where the growth story in India is, and it plays well into the large cap stocks. The big is better thematic that we talked about. That's pretty much 99% of the exposure in this fund. So that's another way would
Max, apart from this ETF on Australian market, do we have any other ETFs?
Oh, look, there are issuers of ETFs all the time. This particular ETF manager we've met, and we know them quite well. But if you wanted to play specific ETFs, thematic based, sector specific, yes, there are. We'll happy to take that and discussion offline. We can show you the names. But I think right now, we've been given our bent towards financial and the large caps, and the conglomerates and the diversified exposure. I think this gives us pretty much ticks all of the.
I think it makes sense. I think the big companies overall have done quite well as compared to the world markets across the world. So because they were the first people to be coming across and driving up the economy. So I agree with you. So I think instead of going into the smaller sectors, I think this is better. Anyway, coming back to Max, thank you. Sorry, you're saying something, Max?
I was just going to say, Vijay, Pooja showed the breakdown of the two indices, Bombay Stock Exchange and the NSE. And you can see that Bombay Stock Exchange, whilst it's got 3,500 stocks listed on it, but really 500 stocks where is the market cap is, and that just shows you that there's long tail of small businesses with very small market caps that are going nowhere. So you want to remain at the larger end of town and not get too cute about gaining specific exposure to up and coming stocks. But there's going to be new stocks coming. India's got a very good, I mean, you would know all people, there's a good incubation of high tech companies that in the last 5-6 years that have been incubated in the private market, and there's IPOs coming on the market in this year and the years forward that will create opportunity to go beyond the large cap stocks. But I think for now, remain tight, focused at the big end of town.
Yep, I think I absolutely agree. Like basically, I think the Paytm and the Zomatos and those IPOs are like and incubation is fantastic. I think that is one of the areas which we should be looking across. Apart from this, I 100% agree. Now, thank you, Max.